Welcome everyone. This is a smaller video today, but I wanted to emphasize something that I see a lot of people doing. I see people jumping into longs, I see people jumping into shorts, and it either wicks or it fades. And it's problematic, especially in this kind of range when, hey, we've been ranging basically um, since late June, right? Unless you count this as not a range, but then we've still been ranging for end of August, right? So this is something that you need to kind of be prepared for. And I wanted to share my take on this, and this has been very effective for me. And that's talking about order blocks and talking about them relative to the actual pattern that I look for called breakers. And now sometimes they're called different things. They're called bullish breakers, they're called bearish breakers, or order block breakers, or sometimes I call them swing low order block breakers. That's really that's an extended name, so I just call it slaw breakers, which doesn't even sound that it doesn't sound better, right? So these are the things that I look for, and and I'm not the one that made this. There's plenty of people that probably get the recognition for that and things like that. But this has been something that I've looked towards for profitability and finding my entries, finding retests, adding on positions, getting out of positions, etc., etc. So I kind of want to cover these. I'm not a order block trader. I do a lot of price action trading, but I don't consider myself a price action trader. I'm very hybrid, and as far as I understand, that's a little bit uncommon. But I do a little bit of price action, a little bit of trend. Adrian is a very momentum based, almost prediction element to that. So I do a little bit of everything. And basically, what I do is I basically just take like two or three good concepts of trend trading, order block trading, price action trading, momentum trading, and I combine them all. And that can get problematic because I'm looking at two different disciplines, but I tend to just filter out anything else that doesn't, that I just don't care for in you know, those disciplines, right? So I just look at what's most effective. And for order block trading, breakers have been the most effective for me. So now we'll get into this, and I'm going to get rid of all this because we won't use this for now. So we'll have just a complete bare chart, like a bare bones chart. And so the first thing what you want to do, so breakers are basically an extension of an impulse that's not quite a trend. It's not a trend. So it's an impulse extension that moves past a certain set of orders or supply and demand. So what you need to know, something like this here, for lack of, and for just lack of time and instruction, like this is basically an order block. So, and something like this would be as well, kind of a range order block thing or what have you. So what you might notice here, so these are all just basic, standard candles, right? So what you need to know, obviously there's high, lows, open, closes, right? And that's how they determine the price. So when you have an order block like this, you're expecting kind of a range low, range high, and so the price is supposed to go back and forth, right? If it goes above, you're supposed to long. If it goes below, you're supposed to short, at least to the next level, right? And if there is no level, there's rules for that, but that's a different video. But what you want to notice here is that it finally went upward, right? So your expectation is to long this. And so the problem is that it retested down. And so, which is usually a sign that you want to long, right? And that was okay for at that time, but then it eventually went down again. So what happened in this scenario? So what happened is we'll keep this, but let's change it to blue so you can't really see it as much. So, um, get rid of that one. So what happened here? We'll zoom in. So you had the range high, range low. This broke upward, which is normally a bullish sign. But what happened is it broke from this range. So what this actually was a mini consolidation, or not a consolidation, a mini order block. And so what this did is it broke above here, and then it broke also the range high, and then it kind of maintained this, but it usually in this you kind of want to go for the middle of the range. And it also broke that barely. I wouldn't consider that a break, but it does work in this instance. So this is what you call a breaker. And the reason it's called a breaker is because it moved through two different supply positions. And the implication for this is that it went too high too fast. So it did kind of an impulse, and it also broke not just this area, but also broke this area. So that's why I call it an impulse breaker. Some people just call it breakers, order block breakers, whatever. I'll also advertise this as like a swing low order block or swing high order block. And swing highs is when you look at the wicks here, and it did maintain that, but it still broke below these two here. So when that happens, whenever a breaker happens, like literally 99% of the time, and I don't have any variable evidence of this, but I've seen this happen so many times. I would say it's at least 95% accurate, probably 99%. And again, this is why I go back to my original discipline. Like I pick one or two disciplines from every type of trading discipline because they work. A lot of people don't like EMA trades or trend trades because they're boring or they're for new traders, so to speak. But the thing is they work. Yeah, they don't have the super high risk to reward ratio sometimes, but they do work. And anybody in trading would think that it is smart to hold Bitcoin for multiple years, for example, if you know it's going to go up 400%, right? Which that's what it did in the past 3 years. So if you haven't made the same amount as what you could make in a trend-based move, then all of this is pointless, right? So that's why I do one or two disciplines out of every discipline, because high probability. So with this, there's literally it's definitely in the 90s, probably 99%. And I think, I don't have concrete proof of that when this goes up, this will retest at this bottom. It'll retest somewhere in this red for sure. I'd say 99% of the time it retests here. I'd say about 50 to 70% of the time it retests at the bottom. And so what we did here, as you can see, we did go up, and this faded, and guess where it landed, right? So the wick landed in here. So this tells me several things. One, if it breaks, and it's hard to tell because this could have went up to 50,000 and came back, right? And that would be devastating. But you never know when it actually is going to fade, and that's where you might look at lower time frames or weakness in volume, etc., etc. But what that tells me is that this is going to eventually fade or come back down to level. And so that makes me cautious whenever we see a trade like this, is to be cautious of a long. Everybody wants to be super bullish. That's not necessarily the right advantage to go full bull in that scenario. And this is exactly why. What this also tells me is that since I know that this is going to fade, that this is also going to test this area. And this tells me two things. One, I know it's going to test here. And also, this could be the sign to go long. This could be the real sign to go long. And in this case, it was. In fact, if let's say you saw this and you wanted to put an order in, and you knew that the order would be maybe in the middle, you would have put a bid in at 29.70, and you would have bought the wick, right? So a scenario with this would be entry here, and let's assume you get it. There's not much slipperage, just textbook scenario, right? And you probably want to put the wick down here, or the stop maybe at the wick. So roughly 3%, and let's say, assuming you went anywhere in here, just this first wick here, you got a pretty much an R of 5, right? So that's pretty good. So that's kind of what I see. If you see that, that's one thing to keep note of. Another plus of this is if it does go below, then you can almost be sure that this is going to continue down. So it's kind of a low risk, medium to high reward scenario. So that's really good, right? So I mentioned all this here. So why didn't I include it until just now? Well, the thing is there's also a breaker here. So this was kind of a fade. But whenever you have one big candle like this, another candle of just anything, I call it just kind of a blank space, and then this goes up. This is an engulfing breaker. So again, you can kind of see that go, but it didn't retest down here at this point. It waited until right here. So what you want to do with this is target the bottom of that wick, which would be right here. And so what do? We broke below it. So that's another breaker. We tested above and we went below again. So that's why this one did not work, because it broke through and it deviated above. This was your time to short. And this is also a bullish or a bearish breaker. And so this is one reason why we've had kind of this weird price action also, is because we've had breaker after breaker after breaker, and it's getting complicated, right? So that's just something to keep in mind. So that's kind of the main attitude of that. Another example would be like right here. So this was a breaker from this order block. So let's get rid of this. So this was a set of orders. So that was an order block. This is a real janky one, but it does kind of count, and you can adjust that as needed. But it did break up, and then it deviated and then went back below. So that's all textbook, right? So that's what I see, and one of the reasons I brought that up is because I've seen that recently, and I've just noticed that people are diving in. Where I can find it. People are just diving in, right, to all these trades because there's just nothing going on and they want to trade something, right? It's like, oh, this has been going sideways for 3 to 5 months. I'm tired of it. I just want a long. I want a short. I want to make money. And look, there's time to do that, right? And the danger in this, and this is built into the behavioral attitude of trading, is that this area is designed to make you go crazy. It is designed to cause you to slip and lose all your money in a range bound scenario versus like when everything is going 10, 20x, right? So, and the reason I said all this about breakers is because we had one this morning, or last night rather, on roughly around the weekly close. I think this was before, shortly before the weekly close. So we can define our blocks, right? We've got one here, and maybe I should use a different color. There we go. We had one here, and this is really messy, but we there's something in there, I'm sure. But we also had one here. This is the main one I'm looking at. So, and then I'm also looking at this supply area right here. So there's kind of like an undefined supply area right here. So what we did is we broke above. So whenever the breaker is technically considered valid when it breaks the high. So I mean, this is bullish, but because these have not been tested, that's usually problematic. And this gets less accurate the lower the time frame, so like 3 minute charts, things like that. Um, this is more for at least an hour time frame, probably, or higher. Um, and it also gets less accurate when you go above like 2 week charts because that's when you start looking at more trends. The higher the time frame, the more likely you should be looking at trends. And that's why I kind of focus on a lot of my trend based charts and positions are 2 day or 4 days and higher. Because like 4 days is my main time frame because it focuses on a trend long enough to maintain a profitable position without having any kind of range bound complications, right? So, and that's another video. So, anyway, range bound broke above here, so this counts as the breaker. That would be the origin of where we would look for. We also broke this, you know, weird supply area, and we also had this here, but that didn't break on that candle. It did break above on a higher time frame. Let's see what that looks like on 3 hour. Nope, it actually stayed under, so that's good. 2 hours. Yep, that stayed. That's kind of interesting. So anyway, so we did break above here, so that tells me, again, going back to what I said, it should touch base somewhere around here. And guess what? It did. And that's one thing I mentioned on my Twitter this morning as well, that we would retest that. So that's the reasoning for that. And so what I had done is I had bought down here because I had a feeling that this would go upward. And then I also, I bought half a position down here at this lower because I saw this wick go above. So I think I bought somewhere around this area here, like low 1900s, like 19.1, And then I also bought here knowing that this would retest. If this retested, I would buy in. And I literally bought in this red box. So that's the positioning. I'm not saying that's going to be a profitable position, but I am saying like that's where you get in. If it's a continuation move upward, you will be the wick essentially. I hate that phrase, but there's a good chance that that'll be a wick position. If it isn't, it's usually a sign of weakness anyway. So it's really a low risk, moderate to high reward scenario. So those are order blocks in general. I know I mentioned this would be a short video. This is probably a little longer than I expected. I may make an advanced version of this, a little more textbooky, as I grow the channel, as I get more notes written down for these kind of things. But that's, I just happened to see that today. I see people, trading this, and they're buying here, right? Because that's the thing, they bought like right here. Well, now they're down like 3%, right? Let's say, 2%. So like, let's say, you bought here, and like, where's your stop, right? So like, if you put in a leverage trade of, with a I don't know, just one of leverage exchanges, they probably stop you out at like 80 to 90%, right? So let's say you did something like this, or even higher, you got stopped, right? And even if you got in like here or here, or even if you waited until like this broke below here, there's still a chance that you got stopped if you're using high leverage. So that's why I emphasize that literally makes the difference of being stopped out versus being, in the wick, basically, essentially. So that's kind of, that's the rundown. Let me know what you think about this, because if you like this, I can make more of a textbook version of it with notes and whatnot. And I do plan on having a series where I actually analyze things and draw shapes and charts out on a tablet. So let me know what you think. If you like videos like these, just let me know. And so that's order blocks, at least how I view them in my weird mind. So stay tuned for more, and hope you have a great day.